So let me know when you are able to see my screen.
Yeah, it's visible and you're audible.
Okay. So welcome all to this Zoom webinar. I know it's a lazy Sunday afternoon, and we are here discussing tax, which again is kind of a sleepy thing for a lot of people, but very important when it comes to your finances. And we all should be ultra aware of what options we have, because all this work we do for earning money. And if we can save some tax and save some hassle in the long-term career, then it would be good. So from the idea of filing sessions, we observed a few patterns amongst our clients, which we wanted to either clarify or have like an open discussion with all of you. So thanks for joining once again. So first thing about like the taxes, what is new regime and what is old regime? I think a lot of you are already aware of the differences. So in the earlier tax regime, there were a lot of complications and a lot of deductions which were available. And people complain to government, we don't understand this. Like, why do we need a CA? Or we don't understand how to file our finances. So it was getting difficult for people, and in general, to simplify the overall process, government introduced the new regime with lower tax rates. So the aim was that you don't need any kind of deductions, but you will have an overall lower rate of tax. So that's how the old and new tax regimes were introduced, and that's what the difference is. Now, you should assess at the start of the year how much you are going to pay tax under old regime by estimating your overall income, and how much you are going to pay under new regime. So if your overall more under old regime and less on the new regime, so you should tell your employer at the start of the year that please deduct my TDS as per the new regime and not as per the old regime, because the tax rates would be different, and vice versa as well. If you feel that under new regime, your overall tax is going to be less or it's going to be more, then like get your old regime benefit. Then moving on, so a lot of people ask us questions like the big why on everybody's minds. Me and my friend, we both have the same income. Why is he getting a tax refund and why is my tax payable? Like I have to shell out more from my pocket. So I just want to clarify that first of all, how does tax becomes payable or you get a tax refund? So for X amount of income earned during the year, your employer is supposed to deduct exact amount of tax which was due on your total income earned. So I'll repeat that. Your employer was supposed to deduct the exact amount of tax which was due on the total income that you have earned during the year. So what happens is in sometimes or in some cases, if you don't show your investment proofs to your employer, they deduct more tax because they are not aware that you are going to claim exemptions. And they're also not aware of the extra income that you have in forms of FD interests or RD interests or any other like side business you might be doing. So they deduct an X amount as your tax. Now, at the end of the year, when you file your return, so we compute basis on your declarations, on your investment proofs, on your additional income, that your tax has been deducted more and it should not have been deducted this much. In this case, you get a tax refund. However, if your employer has deducted less tax, but why this happens is because sometimes you work at two places. For half year, you were working at one place, and for half year, you were working at another place. Now, both of them don't estimate that your total income is going to be, let's say, 20 lakhs or above. So both of them, let's say we have 10 lakh from one place and 10 lakh from another place. So they deduct on 10 lakh, and which is like lower tax slab rate. And the second person also deducts at a lower tax slab rate. Now, when we combine during the end of the year and file your return, at that time, we might assess that the overall tax payable was more, which your employer has not deducted. So it's not like only basis what the CA's calculation is, it's not actual tax payable case. Like on the basis of total income, how much was actually due. So during the year, what I suggest is you should maybe assess your total income during the year that you're going to earn and accordingly invest from the very start. And then when you are at the time of return filing stage, you can actually get a refund or you can like assess whether I'll have to pay tax or not. Any questions? I would like to stop and ask any questions at this point of time.
Yeah, so okay, I'll start with a question. So you're saying that when the financial year starts, so let's say it starts at April 1. So during that time itself, we should calculate a tax for this given financial year, right? That's what you're suggesting.
Yeah, so just make an estimate, like we make budgets, or we are earning X amount of money during the month and we are going to spend it at this much hostel rent or this much like house rent, this much on food. Similarly, you calculate this much we are going to earn every month and this is going to be a total income. This is the new tax regime rate. This is the old tax regime rate. This is what my tax liability is going to be for the year. And this is how I can save tax. If it's coming as more, then you can either make more tax exemptions. And if you're doing like some sort of side business, it's not just salary, you're getting a professional income or you are doing some other business. So then you are supposed to actually pay advance tax as well.
Okay, so advanced tax, if we have a side, if we have a professional income.
On the professional income as well as on the business income as well, because in those two cases, TDS is deducted, which is like 10% flat for professionals. It might be the case that overall your tax rate is 30% and you are not getting the TDS amount equivalent to that. And at the end, when your tax becomes payable, there would be some interest as well.
Okay, so Dr. Amit Kumar Das is asking, when can we file advanced tax any particular month?
Yeah, so advanced tax is filed like quarterly basis. So you should assess your income on a quarterly basis and then file it. So just deposit the tax basically.
And it's on the same portal as we filed our income tax.
Income tax. Yes, it's on the same portal, income tax website. Everything, that's the official website for everything. So don't go to any other links, no other link for tax refund or anything received from WhatsApp. Just open the e-filing income tax website and do that.
Okay, so Dr. ABT is asking how much of the hostel rent allowance is exempted from taxes? Is it 60,000 or there is no limit?
So there is no limit if you are, and first of all, hostel rent is already deducted by your employer. So you don't get HRA, right? You get it as a perquisite. So if you're getting HRA and you're not living in a hostel, you're paying rent to your landlord, you need to have rent receipts as proof and the amount should have been paid through your bank. Now for calculation of HRA exemptions, there are three situations wherein we calculate what is the actual HRA amount. The 60,000 is not the limit. Like there's a limit for without PAN cases where we do not submit the landlord's PAN. That is approximately 1 lakh. If your like total income for the year is below 1 lakh, like if it's above, then yeah, you have to quote landlord's PAN.
Okay, so yeah, so one point is that you've made is that if you're living in a hostel and your salary slips don't mention an HRA received, so
Right.
then you are not eligible to claim HRA exemptions.
That's correct.
And you're only allowed to take HR exemption if you're living outside Ames hostel in a private property under some landlord. And for that, there is an income tax portal also, which tells you how much exemption can you claim. There is an online HRA calculator available, which can in which you can feed in your basic salary, your dearness allowance, your actual rent paid per month or per year, and the type of city that you live in. So depending upon that, it calculates the HRA taxable, which is taxable and which is exempted from your tax.
Yeah,
Uh,
so there's no limit as such. Like in short, to answer it, like in simple words, there is no limit. If you have your rent receipts and your rent has been paid through bank account of your landlord, and landlord is willing to show his rent receipts as his income, then there is no limit. Based on the calculations, we can tell you the amount, how much is exempt.
okay, and so if someone is paying in cash, he gets the
Then,
rent receipts. He gets the rent receipt from the owner.
so ultimately, if he gets the rent receipts and he's paying in cash, and so the ultimate purpose is that the income would of rent would be quoted in landlord's overall income. So if he's comfortable, then it's fine.
Okay, and he has to give his PAN card if it's more than 1 lakh.
Yeah. So moving on in the interest of time.
Hmm.
So our next is like, what is Form 26 AS and what is Form 16 that we get from employer? And why is it like important to match both these? So Form 16 is issued annually. In AIMS, it's done for the period of, I guess, like Feb to March, which is Feb 22, let's say, to I think Feb 23, which is not the standard. Like the income tax websites and in the Income Tax Act says that the Form 16 is given for full one financial year. Financial year starts from April to March. Now, what happens is that all the income that you have earned from April to March is supposed to be assessed as the income for income tax purposes, and we file ITR for April to March period. Now, AIMS gives Form 16 for 1 month prior income as well, like March 22 income was included in this Form 16, and then they excluded March 23 income. So overall, like 12 months income was given. And when, what is Form 26 AS? So whatever tax they deduct, the AIMS or your employer, any, in case you're not working in AIMS, any kind of employer who have deducted tax and deposited with the income tax department, that tax amount and the income on which tax has been deducted is reflected in Form 26 AS. Now, how much you have got and how much has been deducted will also be there in your salary slips. The total of your salary slips will match with amount in your Form 16 in ideal cases, and the Form 16 should match with 26 AS. So whatever you have got should also match with whatever the income tax department has there in their websites. So we need to check at the time of filing if there are any discrepancies. We need to reach out to your employer and they will get it corrected. Now, what is AIS, Annual Information System, and how is it relevant for your income tax return filing? So now, because income tax department has tie-ups with all the banks and all the mutual fund companies and all the places from where we invest, so they get automated returns every year from these places. So without you knowing, the banks are already giving your information to income tax department that this person has earned X amount of interest from FD. This person has sold X amount of mutual funds. This person has received X amount of dividend income. So you should not assume that the income tax department does not know. As long as your PAN is quoted anywhere. Yes. Any questions? Sorry, I can't hear you. Prithvi, are you trying to ask any questions?
Nothing, ma'am.
Nothing. Okay. So all this information of what amount of dividend you have earned, interest in FD, or any other kind of financial transactions that you have made are shown as part of your AIS. And this is reflected in your income tax portal. So at the time of return filing, apart from your salary income or professional income that you have received, you should also check all the incomes reflected in AIS. And that AIS income should also be included in your ITR. Any questions on this? Form 26 AS, Form 16, and AIS.
Form 26 AS does not include the other incomes that we get apart from salary.
So it includes only the incomes on which tax has been deducted. So if on FD interest, your bank is deducting, let's say 10% of tax, that tax will reflect under Form 26 KS. However, if like you have received some dividend on
Hmm.
which tax has not been deducted, the dividend amount was less than 5,000, which is the limit for tax deduction for dividend, for just for an example, it will not reflect in Form 26 KS.
But that will be reflected in AIS.
That will be reflected in AIS. That's correct.
Okay, and so let's say somebody is doing some side business, okay, apart from let's say his profession, and he gets some income. Acha, so for any side business that you do that, and if that is reflected in your account, okay, so let's say you are selling some goods, you are selling some homemade food to somebody, and they pay you via online transaction or via Google Pay. So that won't be reflected in AIS, right? वो तो आपके बैंक अकाउंट में आएगा.
As such, it will not reflect in your AIS, but what the bank also like sends to income tax department, until and unless it's a very small amount, nothing will happen. But once there are some threshold limits, for example, any transactions which are made like more than 8 lakhs, or which are made more than like 10 lakhs or 1 crore, or a series of transactions, if you're making, let's say, cash deposit to the tune of 49,999, just to avoid the 50,000 limit, or you're doing transactions in the tune of 9 lakhs consequently, just to avoid the threshold of reportings. So those kind of like big transactions are also reported to income tax department. These do not reflect in your AIS, but there's a separate system which stores all your receipts and from which places they're like coming in, just to check if there is not any malfeasant like intent of those incomes.
ठीक है.
And also one another thing, if you are receiving any of your incomes apart from salary, then you should open your current account. And if you're receiving a bulk of cash or bulk of like receipts, all these should go into your current account,
Okay, not your savings account.
not the savings account. For business, like because in savings we get interest, so the government says it's only for keeping the savings of individuals. It's not for doing business. So we're not going to give you interest for doing business.
Oh, and what if we receive that money in savings account? Like anything will happen.
So you might be contacted by your bank saying that you are misusing your saving account for your business purposes, and they might close it.
Okay, so we need to open a current account.
Yeah. Okay, so I think we should move ahead.
Dr. Amit Kumar Das is asking what's the difference between a current and a savings account? How to use a current account?
Yeah. So the difference between the current account and saving account is, first of all, you do not get any interest for your current account. In saving accounts, you get 4% interest on the amount that you keep there, like what the balance that you have maintained. That interest is credited to you quarterly. So that interest is also taxable. In current account, you can do any number of transactions on a daily basis. Income can come and income can go, and you can make expenses. The other differences about the charges. So current accounts, usually because they know that business involves a lot of transactions, so they do not apply a lot of charges on each and every transaction. So the charges are less. In savings accounts, the charges are more, and the purpose is also different. On current accounts, you can also get an overdraft, which is the OD limit, sometimes they call it, which is like you can withdraw more than you have in your bank and then repay it later. So basis your credit scores, you can also get an overdraft in your current account. I hope that clarifies. Okay, thank you.
Hello.
Yeah, I think someone is asking some question around the Challan number as well.
So
Like,
Dr. Amit Kumar Das was asking if one has an annual CTC of 36 LPA per 36 LPA professional income, annual CTC of 36 LPA professional income, then how to plan tax in this particular case?
yeah, so I think we can answer your question in the upcoming slides. We can use presumptive income to plan your tax. And if it's a professional income, your total taxable income would be 50% of that, because it's under our limits. I'll show you in the next slide. Okay. So before we go on, there was one section that I wanted to include for everybody's knowledge. So this is carry forward of losses. A lot of our clients or doctors we saw this time had some FNO loss and like loss from sale of shares. So just for your information, like if you do intraday trading, that is buy and purchase on within the same day, that's called a speculative business. And the losses from speculative business can be carried forward for 4 years. And these can be set off. What I mean by set off is like next year when you have profit, you don't need to pay tax on those. You can set off the income from previous year's losses and your overall taxable capital gains would reduce. So that is allowed for intraday trading for 4 years. Then short-term capital loss. This is like if you are purchasing any kind of security and selling it within 1 year of purchase, that is before 12 months. So that's called short-term capital gain or loss, which a loss, for example, sale value was less than the purchase value, then the loss can be carried forward for 8 years. And it can be set off against later long-term capital gains and short-term capital gains both. So intraday can only be set off with intraday. Short-term can be set off with long-term and short-term both. And similarly, long-term capital loss can be set off with only long-term capital gains. And both these are allowed for 8 years. And on all these cases to do this, your return should have been filed for all the years.
Okay. Okay, and the short term and okay, so losses from FNO are included in speculative business.
Losses from FNO, so that's your business loss. So FNOs comes under business income. So that's not classified like in either of these. So on that basis, like short-term FNO losses can be there, long-term can also be there. And they're also like carried out for 8 years. But those come under not capital gains, those come under your business income.
Okay, business income. And you said loss from speculative business and income from speculative business, the losses can be carried forward for 4 years. Now, what is a speculative business? So you said that one is intraday
Yeah. So
trading.
speculative in Hindi, it means satta bazari. So
Okay.
if you are making you're calling out chances on winnings from a lottery, or you're calling out chances from winning from horse races, or in cricket matches, it's seen quite a lot of times that people call out chances, then that's called a speculative business. And intraday is again a speculative business because you are just guessing that the share price or the security price will go up or go down for a particular case, and it's just speculation. So there is no like analysis to it or fundamentals to it. There is technical analysis, but I mean, it's considered speculative in nature.
Okay, and any losses from a business, let's say somebody is running a business. Uh, let's say, for example, we are doctors, somebody who has opened up a clinic, and for the first day that he has opened up, he has incurred a loss.
Yeah, that can be carried forward again
For
instead
how?
of from for 8 years.
Okay. So, okay. So once you've lost is adjusted, you can't use that loss again, obviously.
Obviously. I mean, if let's say you had 10,000 loss and next year you had 4,000 profit, so the remaining 6 year loss would be carried forward in the remaining 7 years.
Okay.
And you would have used the intermediate 4,000 loss. Yeah.
Okay, thank you.
Yeah. So now what are the different income treatments for different sources of income for doctors? So I'm just taking this from a doctor's point of view. I mean, it's same almost for the lot of other cases as well. So what is salary income? Salary income is when you have a like proper agreement with your employer that you'll be working with them full time and you get a salary in lieu of the work that you have performed. So it's a fixed amount that you're going to get. Now, what is professional income? Professional income is when some doctors have a contract with, let's say, Apollo or Max or any other institute, and they are hired on a contractual basis. So they are rendering their professional services to that particular institute. That's called a professional income. And for the professional income, the employer is supposed to deduct TDS. And I think it's a flat TDS under 194J for 10%. Under salary income and in between professional income, what the difference is? In salary, the entire amount of your salary income has the TDS deduction rates, which is as per the normal tax rates, like 5%, 20%, 30% under the old tax regime. They will calculate the tax on basis of that, and they will deduct the TDS. The employers will deduct. Under professional income, they will only charge a flat 10% and deposit to the income tax authorities. However, when you're filing your return, if your total income is more than under the 10% taxable limits, then you need to pay more tax. That's how your tax becomes payable under professional income. But we'll come to how we can save further tax if we are working in as a professional. Then the next thing is business income. So how is business income different from a professional income? For example, if you have opened your clinic, will it come under professional income or will it come under your business income for your private practice? So all the medical professionals and other professionals like legal consultants or even chartered accountants, we are all clubbed under the professional income clause by the Income Tax Act. So if we do business, for example, if we sell our notes or if we sell goods or if we give another type of services, then we come under business income. If, for example, coaching as well. So I'll show you how the different type of incomes are taxable differently. So there's a section of presumptive income. Now, this presumptive income applies only for professional incomes as well as for business income. So the salaried employees, they do not have any chances of saving their tax apart from the Chapter 6 deductions, which are ATC, ATD, and your loan exemption, basically. But if you're a working professional, so, and your total earned receipts during the year is 75 lakhs. So this 75 lakhs is applicable for FY 23-24, which is the one in which we are currently now. So from FY 23-24 starts from 1st April 23 till March 24. So for this year, if your total receipts from all the hospitals combined during the year is up to 75 lakhs, so your total taxable income would not be 75 lakhs on which you will be paying tax, but half of it. So only on the half of that, you will have to pay tax. So that reduces a lot of tax that you might have to shell out. However, if you're like receiving up to 75 lakhs of salary, then in that case, entire 75 lakhs would be taxable. So we see that we can save a lot of tax in the presumptive income. So this section for presumptive income for professional is section 44 ADA. And for businesses, it's the similar thing. However, for business, only the limit is 3 crores. But if the receipts are in the bank account, then only 6% of your total income earned would be taxable. So you see the large amount of difference. For salary person, 100% income is getting taxable. For professional, 50% of income is getting taxable. For example, if I'm earning rupees 100, I'll have to pay tax on rupees 100. If I'm a professional, I'm earning rupees 100, I'll have to pay only 50 rupees tax on only rupees 50. If I'm a business person, if I'm doing any kind of business and I'm earning rupees 100 and I'm getting all my receipts in my bank account, then I will have to pay tax only on rupees 6. That's how the gross differences between the 3 types of income. So obviously, like opening a clinic is better than getting a salary. And doing a business in terms of tax is better than like opening a clinic as well. So that's how it works. And these presumptive incomes are applicable if the transaction is done like through an online mode, 95%. Any questions on this? So I think one of the doctors had asked like how they can plan for their 36 LPA income. So they can plan under 44 ADA presumptive income.
Yeah, so depending upon, so you said that less than 75 lakhs, one can opt for presumptive tax regime. So that depends what the type of contract the person has with their employer, right? I mean,
yeah, it depends upon the type of contract and the type of services which have been given. So if you are giving medical services, for example, you are a working consultant. For example, I'm just taking a gynecologist as an example. If you're a gynecologist and you're working with a hospital, giving them the services of a doctor, So in any case, like whatever the contract you have mentioned, the nature of the income is going to be a professional, right? And it would be taxable under 44 ADA. You cannot by your choice do section 44 AD in that case.
No, but is it not a salary?
It is not a salary. If it's a contract, it is not a salary.
What
It's a
does a
professional.
contract mean?
So the contract means that the hospital has hired you for using your professional services.
Okay, so let me just get this clear. So in a salary, the employer is liable to give you what some benefits, right? Like EPF, like leave, like maternity leave, etc., etc. But those types of services are not given to you if you are on a professional contract.
Yeah. So basically, why do people hire someone as a salaried person and why do people hire as a contractual person? So a salaried person usually is a full-time employee. So they have dedicated their services until termination to that particular employer. So that's why they are like supposed to give them additional benefits. However, for a contractual person, so they're not the dedicated employee of that particular establishment and they can work on their own as well. Usually it's the case that they have a fixed tenure of contract with a particular institution wherein they say we are going to provide you services under this clause and this is how we are going to be operating in between.
Okay, so Dr. Amit Gupta is asking, please explain carry forward loss again by giving examples.
Yeah. So let me move on to the previous slide. That's fine. So any particular loss you want to understand
Dr. Amit, you can unmute yourself also and
and
ask.
ask questions? Yes, that would be easier.
Like I have a loss, in shares,
Yes.
particularly in mutual funds in the year 2020. And I have a gain in year 2023. So how can I balance losses with gains? Is there any option?
Yes. Did you file your return with losses in the year 2020?
Actually, I could not file my losses in that year because the form was different that year. I used ITR 4 that year, and this year I used ITR 3.
So
So,
I think in ITF 4 also, 3 also we have like options of carry forwarding of losses. So if you have not carry forwarded your loss earlier, like in 2020, if you did not file your return with loss, you cannot show it right now. Like in the year loss was incurred, it needs to be filed in ITR.
okay. Okay.
So this carry forward of loss is for
But
the
I have a doubt. Sorry to interrupt you.
yes.
Like in ITR 3, we can give details of previous year's losses also. So
Yes.
how that can be utilized later on in future? Like there was option to fill losses for the year 15-16 onwards. I think last 8 years.
Right. You can fill, but then it's going to be a contradiction in what you have filed earlier in the year in which loss was incurred. And now the date for revising that return has lapsed. And you might receive a question from income tax department stating that earlier in the year you had filed ITR, there was no loss declared, and now you're declaring some losses. So from where these are arising. So it might get you into litigation. Otherwise, we can file it as well. So
But
my
there was no option in ITR 4.
why did you
For
file ITR 4? May I know?
because I wanted to have presumptive tax reduction.
So I think in ITR 3 also you can file presumptive tax.
But ITR 4 is easy to file, compared to ITR 3.
You could have used the services like of any professional.
Yes,
Yeah.
yes.
Yeah.
Thank you very much.
Okay, so I'll explain it once again. So for filing carry forward of losses, why you should file it. So income tax department says you have incurred some loss on sale of shares. That is fine. But if it's a loss, we will allow you to carry forward it in the coming years as well. So if you have gains later on, because the income tax department wants more and more retail investors, or I should say small investors, to enter into the stock market, they are giving this option for them to set up their incomes in the future years. But you should mandatorily file your return in the year of loss. So that's the last column that we have mentioned. If you wish to carry forward your losses, your loss should have been filed in the ITR. Now, once, for example, if I take rupees 100 loss in the current year and I want to file it, then I will file it in the 2023-24 year. Then next year, let's say I have rupees 40 gain. So next year I will set it off from rupees 40. Another 60 rupees will remain as my carry forward loss. Then again, after like next year, we have 20 rupees gain. So then again, 60 would have been set off already. Like on that particular year, only 20 would be set off and the remaining 40 will be carried forward. So this we can do up to 8 years. After 8 years, if you still have any unutilized balance, it will lapse. Or in case of speculative business, after 4 years, if you have unutilized balance, it will lapse. Similarly, if you have long-term capital loss, so it can only be set off from long-term capital gain. Let's say in the next year, you did not incur any long-term capital gain. You only incurred short-term capital gain. Then your set off will not be calculated.
फिर तो
So
शॉर्ट
these are,
टर्म कैपिटल गेन ही करना चाहिए. एडवांटेज क्या है लॉन्ग टर्म कैपिटल गेन? कोई टैक्स बेनिफिट्स हैं लॉन्ग टर्म कैपिटल गेन के?
yeah, there are tax benefits. So the rate of taxation for long-term capital gain is 10%, and for short-term capital loss of equity funds is 15%.
Okay.
Securities, yeah. And speculative business में जो like intraday trading करते हैं, so there's a flat 30% tax which is charged on any profit.
Okay. And so regarding the types of income that you mentioned and the tax liability for that. So for example, if someone has opened up his clinic, so let's say someone is a pediatrician, he sits in the evening in some OPD, and उससे जो he receives money both by cash and both by online transactions. So that income will be a professional income, not a business income.
Correct. That income would be a professional income. That's correct. Because of the nature of medical services being provided. That's not a business
Doctors,
income.
so doctors in general do not fall under a business income if they are providing medical services for any kind.
Yes, that's true. And if they're not like working as a salaried employee.
And not working as a salaried employee. Okay, thanks.
Yeah. So this was it from my side. Any other questions? Happy to take.
Hello.
Yes.
Yeah, so I wanted to ask, like, if a corporate is providing this professional fee, so is the 100% of the professional fee will come under the tax 10% slab, or is it like some portion has to be given like 30% and some portion as 10%?
So I will answer your question in two ways. For example, if a hospital is giving you professional income, then this is the tax slabs which applies, and this tax slabs will apply if you are taking the presumptive income only on the 50% of the total income earned. Let's say earning rupees 100, so rupees 50, or let's say you're earning rupees 10 lakh, to take an actual example. So only 5 lakh rupees will be taken as your total income under presumptive income. And then we can calculate like up to 0 to 2,50,000, there is nil income, then 2,50,000 to 5 lakh. So there is only 5%. And so you will fall under this. And it's not mentioned in the slides, but like if your total income is up to 5 lakhs, there is no tax payable. Similarly, yeah.
Hello.
Yes, Saurabh, you can go on and unmute yourself.
Yeah. So if the total income is say 36 lakhs.
Yes. So if the total income is 36 lakhs, so that would be approximately what 17, 18 approx, right? 18 lakhs. 18 lakhs would be taxable amount. And on that 18 lakhs, so we will, I think, more, if you're not done any kind of investments, new tax regime would be more helpful for you. You can calculate your tax on this. So up to 15, there will be 25%, like 20, following this tax slab only. So it's not that on the total 18, you will have to pay 30%. Up to 15, calculate accordingly, the amounts will come here. And then over and above 15, that is for 3 lakhs, only 30% will be charged. So that's how you will calculate your total income, total tax that will be payable. Plus there is 4% education cess over and above that on the total tax amount.
I have a question.
Yeah.
Should we decide on old and new tax regime in the starting year of a year, or can we do it in the tax returning time?
Are you a salaried person or are you a professional income person?
Right now, salaried. AIIMS
Salaried.
employee.
Okay, so if you're a salaried income or even a professional income, that's why I was asking, I will tell you after this. You should decide your regime at the start of the year. The benefit is if you already know what is your total income, what are the savings you are going to make during the year, you will be able to estimate how much tax is going to be due on your total income. Now, if you tell this to your employer, they will deduct your tax accordingly. And if they deduct it correctly, at the end of the year, you will not have any tax payable or any refund. So why get more tax deducted all throughout the year and not save on any kind of interest, or you could have invested that extra amount in any other securities and earned more income. Instead, you're getting that deducted from your employer and then getting happy at the end of the year that I'm claiming a tax refund. No, that's not recommended from a finance point of view. So it's always good to plan ahead. However, for the professionals, I wish to state that the new tax regime is applicable once you've taken it. You can only go back to the previous tax regime, that is the old tax regime, only once in your lifetime. So if you're a professional or you are earning a business income, be very careful if you want to choose new tax regime and you only estimate that your total income will go beyond a certain point, then your new tax regime will be helpful. So let me say this again. If you are a working professional and not salaried, professional or business income, and you have opted for new tax regime this year, you will be allowed to take old regime again only once. I hope that's clear. Any questions on that?
So that means that if your professional income or a business income is small, let's say less than 15 lakhs, so
Right.
for opting an old regime in that case is helpful because you can claim some deductions.
Yeah, it depends upon if you're making any investments or not, and if by calculations basis your different investments or exemptions allowed applicable to you, your overall tax liability is less under old regime. If it's still more under old regime, there's no point of taking old regime just because you don't want to switch. Why shell out more from your pocket?
Okay, and let's say doctors mostly who are earning more than 20 lakhs after their studies in a professional life, choosing a new regime makes much more sense.
Yes, in general, once you cross a certain limit, even if you take all kind of deductions under old regime, you will not be able to match the overall tax savings.
I think
That's correct.
the only benefit of an old tax regime is only if you have a house loan.
Housing loan, yes. Education loan, yes. If you have a large amount of HRA, you're paying a lot of rent, then yes.
Okay, then old tax regime you get a lot of deductions through that.
Yeah, and then for business income also, there are a lot of reductions under old tax regime, which we can take on separately. And I think doctors are not usually involved in those kind of businesses.
Okay, so arrear. Yeah, so someone is asking, please also explain including arrear exemption in Form 16.
Yeah. So if what are arrears? Arrears is that the amount was due to us. Let's say in last year, it was due to us in the year FY 2020 and 2021. That was 3 years back. There was some amount which was not paid to us. And now we are receiving that amount in the current year. So what happens is it's inflating our overall salary. It's increasing our salary. If we would have received that arrears in the year in which it was due, that is, if we would have received that arrear in FY 2021, maybe our taxable salary for that year would have been less than what currently it is today. So income tax department says, okay, you have received your income late, you can take some relief on that. What is the amount of relief? if your total tax, including the arrears in current year, is more than what would have been if you have included that income in the year in which it was due, that is in the year 2020 or 2021. So the amount of difference is your relief that you can claim this year. For that, we file a separate form 10E, and that relief is calculated under section 80. If you have received any arrear, go to your employer, like go to AIMS, check your salary slips every month, go to AIMS and say, I want to claim relief under section 89. And ideally, they should show the amount of relief in your form 16. So even if they don't show it in form 16, we can file it at the time of filing the returns, ITRs, and reduce our tax liability.
Okay.
Is that clear? Or any questions on that is welcome as well. You can unmute and say.
Yeah, so I want to ask regarding leave encashment. Is that taxable or not?
So leave encashment is exempt from like tax, it's not taxable. But when we calculate the total taxable income, we have to first add it. Like if you are earned something, then only it can be exempt, right? What people usually do is they exclude it from the total income because it's not showing in the total of salary slips, it was received separately. And then they reduce the overall leave encashment amount. That is not how it is to be done. So the treatment is you add it in your income and you deduct it later. So the net effect is nil, that particular income is exempt. It's not taxable, but that's how you should state it in your ITR filing.
Okay, thanks.
Any other questions, or I think we are good to go?
Yeah, I think that's it. Let me just check the chat box once. Yeah, I think no other questions. Okay, thank
Yeah.
you so much for the session. And we'll have some more sessions in the future if somebody wants it.
Yeah, and also just want to say that if you have any questions in between during the year or want any kind of services, you are happy to like approach us through WhatsApp. So we're always there to help you. And thank you for joining this session once again.
Okay, goodbye.
Bye-bye.